Good morning, ladies and gentlemen, and welcome to the Panoply Holdings PLC investor presentation relating to the preliminary results for the year ended 31st of March 2020. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab on your screen. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard. I'd also like to remind you that this presentation is being recorded. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to Neil Gandhi, CEO, and Oliver Rigby, CFO of the Panoply Holdings PLC. Neil.
Great, thank you very much, and thank you all for taking the time to spend with us today. We've got quite a lot to get through, but we will make sure we leave plenty of time for messages, for questions rather. So firstly, quick introduction. I'm the CEO, co-founder of the group. Been in tech services forever. It feels like forever anyway. Built and sold a number of companies and had the idea for the Panoply based upon a number of innovations that we'll talk about later on in the presentation that had taken place over the last few years, which I felt was going to change the face of how technology services was delivered to large clients, and as I say, we'll come and talk about that. I'm joined by Ollie Rigby, my co-founder. Ollie and I have been working together on this since December of 2016. We IPO'd in, as many of you will know, in December of 18. That feels like ages ago, but it was only about 20 months or so ago, which was really the inception of the company, was that moment onwards, really. And we've sort of grown from there. So without further ado, I'll take you through what we're going to talk through. We're going to talk through who we are, why we exist, really, and then get into the group at a glance, show you there, and take you through the financial results, commercial vision, an update on our current trading. Some of you will have seen we did a trading update. I think it might only have been last week. Nowadays, things are moving so fast that a week feels like a month, but it was only last week. Take you through our strategy of how we really intend to execute on that commercial vision, really. And then a couple of case studies just to sort of bring our work to life, to give you a better idea of what it is we do. We'll close with a summary and an outlook, and as already been mentioned, some time for Q&A as well. So, why do we exist? We exist to help our clients on the digital transformation journey. And let me tell you that I'll start with telling you what digital transformation is not. It is not working from home. It is not answering emails on a remote basis. In recent weeks, we've seen some sort of commentary around that, everyone's in digital transformation suddenly because they've all decided they can all work from home. That's a few VPNs, maybe some cloud-based stuff, but not really. And the best way to bring that to life is to talk about iTunes and Spotify, things you'll all be very familiar with. iTunes came about in the early 2000s with the advent of the iPod. And was really, it was a game changer in many ways, in that, it meant that we could buy our music online, we could download to our device, we didn't have to go to the shop. But really the only change was that. It was a superficial level of change, really, which was, instead of buying a CD from a shop or from mail order or from e-commerce, we could suddenly download the track we wanted in real time onto our device. Great, but the industry didn't really change. It was still music. Companies still operated in largely the same way. Retailer, in this case Apple, took their cut, and artists still made their money on music. A few years later, new product comes along, Spotify. A few people in Sweden decided that they were going to completely disrupt the entire industry and digitally transform the industry. And that's what you see today in Spotify. So today you don't own your music. You play music wherever you want, whichever track you want, whenever you want. You pay a subscription. And the music industry has fundamentally shifted so that artists now make their money from touring, they make their money from merchandise, but they don't make their money typically from music. That's a wholesale disruption change in that industry. Now apply that to where we operate, which is predominantly in public sector, and we'll talk about our public sector numbers in a while. If you look at what's gone on in the last decade, since government digital services was introduced back in 2010, the last decade for us has been about the iTunes-ization of government. So you can now tax your disc online, tax your car online. You can apply for a passport renewal online. But really, underneath the surface, not really very much has actually changed. The next decade, the decade that we operate in today, you know, from now to 2030, is really the decade about fundamentally changing how government delivers services to service users, to taxpayers, to the people that it supports and helps. And that's what the Panoply is all about. It's about that level of transformation that exists and the opportunity that exists. And we'll come and talk about Michael Gove in a bit and a quote, a speech he gave recently. But many of you will be familiar with Dominic Cummings and some of the stuff that he's written on his blogs. He talks about $1 trillion bills lying on the pavement. This is where we transform services. You know, to us, it seems crazy that we still have a tax disc system. I mean, why aren't we doing road pricing? Largely because the reason we're not is largely because, you know, we have these monolithic systems that are inflexible, that we can't change. And we have to change that and move towards much more modern architectures, so digital transformation is not the superficial level. It's the user level, of course, as well, but it's also changing the fundamental plumbing underneath to deliver a new set of services in new ways to customers, typically at a fraction of the cost of how they've been delivered before. So really exciting time for us. So in terms of the group at a glance, so today we are 381 people, of which 220 are in technology. But interestingly, that 92 there are in strategy and design. So this is the end-to-end proposition that we've now built. We've grown through acquisition, as you know, and today we have an end-to-end value proposition that truly delivers on the digital transformation agenda that the client has. We believe that we are the only mid-market, 40 million run rate today, so mid-market. We're the only mid-market, end-to-end, government-focused digital transformation company on the market available. To bring that to life, so if you're considering a new service, you're considering, and we'll talk an example later on about fundamentally shifting and changing how social support, children's social services works, then you have to start with, what are you trying to do? What are you trying to achieve? Really understand the user at a real level of detail, understand the kind of underlying processes that really should happen rather than be constrained by the technology, and then bring technology and design and underlying systems along with you to do that. You do that by putting together a small multidisciplinary team of someone that consists of an organization design expert, a service design expert, a user researcher, a UX designer, but a full stack software architect, somebody focused on microservices and APIs, somebody that can analyze data and understand what the data is actually telling you. And you need this end-to-end team. And there are very few companies today, apart from the very large, there are very few companies today who can actually put forward an end-to-end team. And we are increasingly seeing opportunities as a consequence of being that mid-market organization that can do that. And that's really exciting for us. Yeah, we operate in a huge market. Our total addressable market is forecast to be worth £20 billion by 2025. So that's an overview of the company. I'll hand over to Ollie, who'll take you through our year to 31st of March 20 numbers.
Thanks, Neil. Thank you, Neil. Just move the slides on. Good morning, everyone. Thanks very much for joining us today. So really pleased to take you through our first set of full year numbers as a listed company. Obviously, last year we completed in 2019 in December of that period, and as a result, the acquisitions completed at that date, and effectively we only had 4 months and revenue coming through the group. So here where we present numbers, the comparatives we present are on a pro forma basis, as if those group of companies that we acquired at IPO had been part of the group for the whole of that period. We think it provides a better, more useful place to compare the performance of the group. So cutting to the numbers, so revenue up 43% year on year to 31.5 million. That translated into an adjusted EBITDA number of 3.4 million on the year. Again, up 62% on the prior year on a normalized basis. EBITDA margin increasing from 9% to 11%. Sales backlog. So we finished the year with 15 million pounds worth of contracted revenue. In the period, in the first quarter of the current period, we've signed 13 million pounds worth of new work. And if you add sort of our recurring revenue to that, effectively you see that our backlog will have increased over the course of the first quarter of the year. So it's been a great start to the first year. It's been a great start to the year. Cash at the end of the year was 4.6 million. It was down year on year, but largely because of the acquisitions of FutureGov and Amio that we made, where we used roughly 2.4 million of cash for those, plus the associated exceptional costs, the acquisition costs related to that. So yes, cash was strong. Would have been circa 7 million had we not made those acquisitions. Pleased to report our first EPS number, 3.6p. Profit after tax at 2.7 million after making adjustments for certain accounting items that the directors look through in terms of fair value adjustments associated with acquisitions and amortization associated with acquisitions. We also look at adjusted EBITDA pre-central costs. So as part of building the group, we have invested in building a central team. We've invested into a central team to allow us to grow. We don't expect that central team to grow significantly as we continue to build out the business. But outside of that, excluding those numbers, you've seen growth to 5.2 million of EBITDA from the underlying companies within the group. Public services revenue, as Neil alluded to, significant portion of the group in the year, 64%, 20.1 million. Actually, on a sort of pro forma basis, if you include the acquisitions of Amio and FutureGov for the whole year, if they'd existed, that number gets up towards 70%, very much where we are positioned now. The remaining 30% is obviously in commercial, and we can talk a bit more about that in a minute, but it's largely recurring and hasn't been impacted at all by the current COVID situation. Worth noting, and we'll come on to this a little bit more detail on the next slide, that repeat customers in the year, circa 70%. So that means that customers we build in 2019, of the customers we build in 2019, 70% of those will continue to be billed in 2020, showing the sort of longevity of our relationships and the importance of our relationships to our customers. A really great number for us to present is our collaborative revenue in the period. So this is revenue where one of more than two companies has been working together to deliver client outcomes, and that's gone up to 8.9 million in the year, or 28% of total revenue, and really shows the group coming together and the opportunities that we're seeing. Yeah, particularly, we'll touch on these perhaps in a minute, around opportunities that businesses could not have won by themselves, and where it's taken capabilities from across the group to come together to win those. In terms of client spread, our top 10 customers during the year accounted for 31% of revenue. This is down from 54%, and actually our largest customer has gone from 24% down to 10% year on year. So reducing our risk to those customers, and showing the spread and breadth of the customer base we now have. We're up to 265 customers against 191 in the prior year. We often get asked about sort of recurring revenue, and the fact that we're a services business, which means we have very little visibility about revenue, and we're not a software business, etc., etc. I think what we're trying to do, putting together this slide, is to show a bridge that takes it builds up that 31.5 million of revenue that we reported this year. So circa 28% of our revenue in the year was recurring, and what we mean by that is long-term contracts, where we continue to work with a customer for a rolling basis, and the average length of those contracts currently is at about 31 months. We then have our repeat customer base. Clearly, we alluded to the fact that 70% of customers continue to be billed in the year. Some of that falls into recurring, some of that into repeat. But if you take those together, that's combined 75% of revenue in the year, effectively coming from either recurring or repeat customers. The remaining 25% comes predominantly from government work, and I think it's worth noting that government work, the way that that's won is typically through frameworks and opportunities that come out of regular occurrence. You know, we'll be bidding on many multiple opportunities every month that come out. It's not like the private sector where, you know, if you've got to build a relationship, wait for the opportunity to come out and be in the right place at the right time. Clearly our brand also helps us in that position, in that space. And then commercial, small part of the business, but still new customer wins in the period at 5.7%, taking us up to 31.5 million in the period. I'll hand back to Neil.
So just a summary really of the year before we get on to strategy really. So, you know, we have positioned ourselves, this has been the build year, the year just gone, where we built ourselves up to becoming a leading alternative provider in digital transformation in public services in the UK. And it's an exciting place for us to have built ourselves towards. I would say that this is the year with full PLC related costs, full central team costs. This is the first full year where we've been public for the whole time. So this is really the benchmark year for us. Moving forward, you know, we have built and used that platform to go and win a number of great clients. One I'll bring up here is NHSX. NHSX, we won back in January. NHS have a strategic imperative, which is to figure out how to use artificial intelligence in the NHS to improve patient outcomes, to reduce costs. And so they put out a tender, NHS put out a tender to run the AI lab, which is a lab where technologies will be evaluated and experimented with, and those that sort of seem to work rolled out at scale. We won the contract to do that, to run that lab back in January. What's fascinating about that contract is no one of our individual companies could have won it. It required 4 of our companies to come together, to pitch together, to work together, and to do so under a single brand in order to win that particular opportunity, which is now running to several £100,000 already. Now, you know, we see more and more of that happening. Camden Food Standards Agency, I think 4 of our companies are involved in Food Standards Agency, 3 are involved in Camden. So we see more and more of that. So Ollie talked about 28% of our revenue being collaborative. Collaborative, we started out the year, last year, working hard to kind of get the companies to work together. We've ended the year where collaborative working is a way of life. It's, you know, we use Slack across the group, and every day, every hour of every day almost, there are people communicating on different opportunities where they're working together. So that has become very much the norm. The acquisitions of FutureGov and Amio were really about cementing our position in the public sector with that full service offer, the full end-to-end offer. And that end-to-end offer really has put us into a pretty unique position. And then post-period, we completed the very small acquisition of Arthur Lee. It was it wasn't a particularly expensive acquisition, but for us, it helped us with our Microsoft stack capabilities, which is something that we were looking to do. So overall, fantastic year. You know, obviously the numbers speak for themselves, but underneath the covers, actually lots of the foundation building blocks for the future were laid, and we're really excited about the future. Talking to the future, our commercial vision, we took this opportunity in the RNS to lay out formally our commercial vision for the group, and you know, essentially we plan to achieve 100 million run rate revenue by March 2023, and for that to deliver at a run rate level again 12 to 14 million EBITDA, and we'll do that through a number of ways. So firstly, organic growth, and we'll come and talk about branding shortly, and consolidation of brands, simplifying the message, making us easy to buy from. We've learned a lot. The NHSX contract taught us a lot about how we have to position ourselves under a consolidated single set of brands, and we'll talk about that in a bit. But we're convinced that with the end-to-end proposition, with a tight brand story, we can absolutely drive 10 to 15% predictable organic growth, like-for-like organic growth, every year for the next 3 years at least. So that's one way that we head towards our 100 million. The other way, of course, is by adding acquisitions, and we plan to add a further 35 million pounds worth of acquisitions over the next 3 years or so. Now, if you consider that really we're at 40 million run rate today, that has largely been built through acquisitions plus some organic growth. But in terms of our credibility of adding 35 over the next 3 years, I think the fact that we are here after 20 months since being listed kind of gives you confidence that we are credible in saying that we will add 35 million in revenue over the coming 3 years or so. Through those two things, we intend to ensure that kind of 70%, roughly 70% of our operating profit will drop through to positive cash flow. You saw cash conversion ratio in the release today of 91%. We're very strong from a cash generation perspective and intend to continue to be so. We intend to use that cash both to help us with our acquisitions, but also pay a progressive dividend policy, which we anticipate paying from this year onwards. We were due to start from the current financial year onwards. We were due to start now, but obviously COVID came and it was felt it was prudent to hold on to cash at this time. But we certainly intend to pay a dividend starting from the publication of this current financial year results. And we would intend to pay something like 15 to 20% of net income. Liquidity, we don't want to overextend ourselves. We like to be keep the leverage level at below 1 times EBITDA, and all that together gives us, we think, the confidence to get to that 100 million run rate by March 23. Back to you, Ollie.
Thanks, Neil. So just a quick update really on Q1 trading. So we took a slightly unusual step of announcing our Q1 results. Obviously not a name requirement to do so, but we felt that transparency at this time was super important. And we recorded a record quarter with revenue at 10.1 million and adjusted EBITDA at 1.7 million. Significant growth on both a statutory basis, but more importantly on a like-for-like basis, with revenue growth of 10% and organic EBITDA growth of 54% during that period. In addition, we saw really strong cash conversion during that period. So cash increased by 2.3 million over the period from the 4.6 on the previous, or one of the previous slides, up to 6.8 million in the year, and that's without taking into account any sort of government measures we haven't taken advantage of. So we weren't in a position, we didn't take any furlough money at all during the period and haven't taken any to date. Our teams have remained very highly utilised across that period, and for us it was a strategic decision not to furlough anyone on the basis of the sector that we operate in, a principal decision around that. In terms of the quarter, as I've already alluded to, it was very strong in terms of new contract wins, seen significant new contract wins across all the whole of the group, totaling 13 million pounds in the period, and meaning that the period with an increased backlog compared to the end of the year. Back to Neil, I think.
We're just waiting for Neil to reconnect to his microphone. Oliver, just bear with us 2 seconds, please.
There you go.
Thank you.
Technology challenges.
Yeah. Well, at least it's live, right?
better than my children running into the room and screaming and hitting me over the head with something.
No problem. Neil, if we could just ask you to locate the top of the screen as the microphone icon. And if you just press that to on, thank you very much indeed.
Great. Can you hear me?
Welcome back. We can, sir. Thank you.
There you go.
Floor's yours.
Cool. Thank you very much. So strategy moving forward and how we intend to execute on that plan. So the first thing is the market has come towards us. This is a quote which you can read at your leisure in length, but of a speech, dictionary lecture delivered by Michael Gove in June 27th this year. And we couldn't believe it when we read it because we thought, wow, he's just played directly into our hands. Essentially, it's saying, and you'll have all heard the old adage, no one ever got fired for buying IBM. Well, there's a change occurring, and there is a recognition that IBM et al. Are not always the answer, and that innovation comes from taking a different approach. And in fact, you know, today we are bidding on a framework at the moment. Can't say any more than that, but the group evaluating those bids have already stated that they don't want the very big SIs, very big monolithic companies, and they don't want the very small either. They want organizations around about the middle, and we regard ourselves very much in that middle place. That we're at 40 million run rate. The kind of BJSS, Agilysys, Kainos type organization, you know, those level of organizations, they want organizations like that, and like us, really in the mix. And so we see this. We see it with Dominic Cummings with his, I mentioned $1 trillion bills. You know, this real passion for innovation that's coming through from the very top of government. Now, that doesn't always translate into a change of behavior on the ground, but we are seeing enough of that change of behavior on the ground to give us a great deal of confidence in the future and what our opportunity is. So firstly, the market itself is coming towards us, and we will continue to play with our end-to-end, a unique end-to-end service. There is nobody in the mid-market, aside from us, as far as we can tell, that has that true end-to-end service today. So you know, that gives us a great opportunity. And that's played out in this chart. So we tried to chart our competitors on this, and the vertical axis is the kind of the digital migrant through to digital native. So we're a digital native organization. We are cloud-based, agile-based from the very beginning. We don't have any legacy. We don't have any what's called waterfall legacy. So before the Agile Manifesto was published all the way back in 2001, that really took a decade to gain traction. Before that was published back then, software was done in a very linear fashion. So it was write the specification, write the software, test the software, release the software, and it would take a long time. And typically, the specification phase was incredibly boring. You were trying to ask people within a business to talk about how they work, and they weren't really that keen to tell you how they work because it was very boring to spend time with a business analyst. And typically, you'd end up, many of you have seen that swing analogy of what you end up with. That's a waterfall methodology. Agile was all about build something quick, prototype it, show, is that what you meant? No, that's not what I meant. I meant this. Okay, go away, come back in. And so the Agile Manifesto came about, and that caused a change. This is the stuff I talked about earlier, that there was a change, there has been a change in the way that consultancy is going to be delivered in the future, and this is one of the changes. The next big changes were the advent of the hyperscale clouds. The stuff that you can do, and we'll come and talk about a case study in a bit, of where we've leveraged the Microsoft Azure cognitive services APIs. I mean, you know, this is stuff in the cloud that 10 years ago, 15 years ago, you would literally dream of being able to buy off the shelf, and today it's available. So you can, it just doesn't take that many people to write great software. And the next big innovation was GitHub, 2008. Very technical. GitHub is effectively a code repository. For those that don't know about it, it's a code repository. There are 28 million open source contributors to GitHub. It's owned by Microsoft today, but there are still open source contributors. Which means that if I need some code, I don't have to always write it from scratch. I can go to GitHub and it might be available for me. Which means that today, a really well-intended, you know, a group of people with the right motivation that ranges from a service designer through to a user researcher, through to a UX designer, through to full stack software architect, through to some engineers, through to some people that understand data. Those people can come together to create the most incredible products in a fraction of the time. And that's what I mean by, when you built a company from scratch with that in mind, with a 6-person squad in mind, rather than a 100-person, 200-person, 300-person engagement, where you've built from scratch to work with the client and you embrace client employees in amongst your team, even though you continue to take responsibility for outcomes, then you create a new kind of company, and that's the kind of company that clients are looking for. And in terms of full service, we have some great competitors out there, but we see ourselves today as pretty much the only full service end-to-end expert in both at the service design end as well as in the software engineering end, mid-market type company. And as I think as a consequence of that, as I say, we have a huge opportunity, and I think we will continue to push on this. As we make more acquisitions, we're looking for digital native companies who can come and slot into our organization, who are, extremely comfortable with Slack, who understand Google Docs and work in this very collaborative, high-speed way already. When we try and work with legacy organizations, they struggle to work with us because our pace, because of the tools we use, the way we operate. It was no big deal for us to move to remote working during COVID because we were already, all our tools, everything we were set up to work from anywhere anyway. So, so we will continue to push on this market sweet spot as we carry on. And then the big announcement is this introduction of our full service brands. We talked about NHSX. We talked about 4 of our companies coming together to bid it. The reality is, we don't use business cards particularly anymore, but that would have meant, in the old world, it would have meant 4 sets of business cards going down on the table, which would have been very confusing to the client. So what we've decided to do is take a long-term decision towards moving towards 2 full service brands. One, FutureGov, which looks at the world from the CEO, COO perspective, looks at it from the organization down, looking at organizational design, service design, product management, and so on. And then Foundry 4 coming at the world from the technology stack up, so looking at hyperscale cloud migration, data liberation, machine learning, artificial intelligence, robotic process automation, very much a CIO, CTO audience. So both of those brands coexisting, very much targeting different people, but with the same digital transformation agenda, so that we see this very much as a pincer movement as we move around the client. So the clients can engage as whichever brand they want. If they're more, and we can look at a bid as well. We can say, look, that bid there is a FutureGov bid. That bid there is a Foundry 4 bid, based upon the audience, based upon the sort of questions that we're asking. And we can put forward an incredibly strong value proposition, regardless of where that's coming from, and position ourselves as absolute experts in that space. And that this for us is really the driver of our organic growth story. I'll take you through a couple of case studies. So the first one is Family Story. This case study actually won Computing's Public Sector IT Project of the Year last year. And this is an example of where you radically look at how something is delivered. I talked about, why do we still have tax lists? Why do we still have a benefit system that's so rigid that people can't get money for 5 weeks when they're in desperate need? Why is that? It's there because the underlying systems are so rigid that they can't flex around an individual user and so on. So Family Story came about by looking at how does a children's social worker work? What do they do? What are they trying to achieve? They're trying to help families. They're trying to help children. What are the barriers to that? Trust is one barrier to it. Typically when a social worker turns up, there's a fear that the social worker is going to take the child away. And so there's this kind of secretive thing that's going on, and the social worker's writing notes, and the family doesn't know what's being written about them and all this kind of stuff. That's one thing that's going on. The other thing that's going on is because of the monolithic systems, social workers are historically been spending around 60% of their time either writing notes, recording stuff, processing stuff, liaising with other agencies, and only a limited amount of time actually in front of the children. We recreated that entire thing through Family Story, a system where entry was done on a tablet or a mobile. The notes could be shared with the family, so creating that sense of trust. Automatic APIs out to different systems, modern architecture. So, but it effectively ended up increasing social worker productivity by 30%. This is Dominic Cummings' low-hanging fruit. The days of 2, 3, 4, 5% incremental gain are done. That's been done in the last decade. The next decade is about 30%, 40%, 50% type things. These are the $1 trillion bills. And, not only is it a great story from that perspective, but when we rolled this out, honestly, when it was rolled out, social workers who we presented it to, there were literally tears of joy as they realized that they could get on and do the job they've always wanted to do rather than being tied to these old, horrible monolithic systems. So huge case study, rolled that out in 3 boroughs across London and with an opportunity to obviously take this learning and work to other local authorities across the country. The next one is much more technical. So this is Hello Nina, which is conversational AI for a top 10 global accountancy firm that we're working with across Europe now. And this is what I mean by stuff that you can just pick up from the cloud. I mean, we used Microsoft Azure's cognitive services platform to create a natural language processing conversational application. So this is about really speeding up and helping the audit process. The big challenge that this firm had is they wanted to be able to offer audit services to typically a smaller kind of client to what they typically normally work with in a cost-effective way. And so we built effectively the online, the chatbot auditor, which gathered all of the data, all of the preliminary work that you typically do, actually grabbed all of that ahead of time and put it into a certain format so that the auditor could then start to work properly without getting too heavily involved in that preliminary process. So again, deeply challenging, very technical, very simple interface, but actually under the covers is a great deal of technology, and you really do need that deep capability. So you need a capability at one end to deliver Family Story and a deep technology capability. The person that ran this project has a PhD in artificial intelligence and has written a book on the AI-powered workplace. I mean, these are, these people all coming together to work to deliver digital transformation is profoundly different to what else is out there. So on to a summary and an outlook. So we are in a huge and growing market, and the market trend is in our favor. The move to mid-market, the recognition that the monoliths aren't always fit for purpose is a huge opportunity for us. We've built the platform now, and so we have that end-to-end service, and now we're at that critical mass. The real focus is that organic growth for 2 brands. We will continue to make earnings enhancing acquisitions that adds to that capability, but I would say that you don't expect us to make 11 acquisitions over the next 20 months. That this is much more. We've always been very particular about what we bring in, but we will be very specific about the gaps that we're looking to fill. But we will obviously acquire that £35 million worth of revenue over that 3-year period. We will continue to focus on ever improving margins. So you will be able to see our EBITDA margin rise year after year after year. And we will continue to ensure that we convert to cash. I mean, as you've seen in Q1, £2.3 million cash conversion in that period, very strong period for us for that. I mean, obviously it was a great Q4 as well, which meant that cash flowed through into Q1. But as you've seen, we've also had a great Q1 as well. One of the tricks for us is to continue to be entrepreneurial through our operating model, which we call consistent autonomy, where we continue to have an environment where we encourage culture of cultures. We continue to be deeply purpose-driven, and the entrepreneurialism comes really from the fact that our people, you cut them through the middle, they are deeply committed to improving public services. It's the thing that motivates them. It's what gets them up in the morning. It's what drives them, and it's the common theme across all of our people. When companies roll up into us, they're not doing it on a financial arbitrage basis. It's not an exit for them. We never position it as an exit. Typically, these companies that we're buying will often be made of people that came from the public sector, who created their companies to create change in the public sector. They recognize, when you talk to Dominic Campbell, you talk to Mike Deering, at AMIO, or Dominic Campbell at FutureGov, their reason for joining the group was to vastly improve their ability to deliver the kind of service that they're looking to, the vision that they're looking to deliver on. An example would be AMIO. AMIO, there's a big move in central government right now to create unitary authorities, to merge local authorities together. And the example that the local government minister cited in his speech in early July was Dorset, Buckinghamshire, and Northamptonshire. AMIO have worked on Dorset, Buckinghamshire, and are working on Northamptonshire. They're the leading light in the unitarization of local authorities, working with the chief execs. As that speech went out, the number of inquiries that they got shot up through the roof. But they recognized when they were coming in that this was coming, and they knew that as a small independent organization, they were not going to be able to close the level of business that they can now close as a consequence of being a part of a £40 million group. So, overall, we think we're really incredibly well positioned to deliver on our commercial vision. And on that note, we'll take some questions. Thank you.
Neil, Ollie, thank you very much for a very comprehensive presentation. That's great. Ladies and gentlemen, please continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while the company take a few moments to review those investor questions submitted already, I'd like to remind you the recording of the presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard on the Investor Meet Company platform. Lastly, before I hand back to Neil and Ollie, I'd like to remind you that your feedback is important to the company. Immediately after the presentation has ended, you'll be redirected for the opportunity to provide feedback in order that the company better understand your views and expectations. Neil, Ollie, I know I haven't given you a great amount of time. We've had a number of questions submitted through, but I wanted just to hand back to you to respond to those where it's appropriate for you to do so. And in doing so, could I ask you please to read out the question and who it's from? That'd be great. Thank you.
Sure. We have a series of questions from Thierry. So firstly about, he asks about, could you please provide details on the services you exactly provide? For instance, you speak about Camden, what are you delivering to them? Camden, we delivered something called Beacon. So this was part of a COVID response. And so the government identified a number of people around the country who were vulnerable, shielding, people that needed to be shielded. They then distributed that list out to local authorities, and local authorities took on responsibility for making sure that those people had everything they needed, from food to medicines to any other need that they had. And so what we did at Camden is we very quickly developed a system where those shielded residents could be married up with local service providers to provide all the services they need. That was put together incredibly quickly. It was a great project, and we continue to help them with further COVID response in addition to that. So that's that particular project. I think Thierry had a couple other questions. So firstly, I do apologise for using Dominic Cummings' name as much as I do. I know, this isn't a political thing for me. I don't really want to get into politics at all. But some of what he says is true. Whether we like him or not, whether we support him or not, is another matter. But some of what he says, we truly believe is true. I mean, I'll give you an example. We saw a contract awarded to Capita for MOD jobs, £1.3 billion. And when the system went live, I mean, it's a 10-year contract to run the whole of the recruitment process for the armed forces. So it's not just about the system. But when the system went live, candidates couldn't register their details. We saw a small company that we know deliver NHS jobs for 5.5 million. So when you talk about trillion-dollar bills, when you talk about the vast differences in the opportunity, then that's really what we're talking about. But I do apologize for using his name. Jake asks, what characteristics do we look for in an acquisition? We look, first and foremost, we look for values fit. First and foremost, by miles. Are these people, when you cut them through the middle, do they care about public services? Are they here to make a difference? This is not a financial arbitrage buy and build. This is not about buying cheaply, listing for more, and making money along the way. This is about fundamentally shifting how public services get delivered, and how we end up with better outcomes for service users at lower cost for taxpayers. And we're looking for people who believe in that, and we do find them. There's lots of really great smaller companies out there, and when they join us, their motivation for joining us is to extend their reach, to leverage the fact they're part of something bigger, to go and win bigger deals, in order to have more impact. And I think that's a fundamental difference between us and other buy and builds. Lee asks, and Ollie, I think maybe you can have this one. Many companies are going back to market for cash. Do you have any plans to do so for further acquisitions?
I think that the short answer at the moment is no. We are well capitalized. Currently, we have a very supportive relationship with HSBC, and we're cash generative. So in terms of, just worth touching on our acquisition model. So we are typically looking for cash generative businesses, circa 5 to 10 million revenue, generating between 1 and 2 million of EBITDA. We typically value those businesses initially on a multiple of EBITDA at between 4 and 8 times, and then what we're looking to typically do is to pay circa 50% cash and 50% shares for that business. And so on that basis, based on the cash generation we have, potential future support from HSBC, we believe we're well positioned to sort of certainly get a long way down the road on the £35 million worth of acquisitions that we're looking to complete over the next 3 years without going back to market. Clearly, if the right opportunity came up that was significantly larger than those businesses that we're currently targeting, then perhaps there may be a requirement to come back to market. But at the moment, there is currently no intention to do.
Thanks, Ollie. Thierry asks, how do we define end-to-end? So end-to-end for us is being able to understand the right organizational model to deliver on the task. So it's being able to understand the deep technology changes that are possible, and then also create a user-centered service that delivers on the outcome that people are looking for. There have been so many examples, as you know, of technology people creating something that really doesn't fit the bill for what the service user actually wants. This is about doing it end to end, from understanding the organizational model to understanding service design and how the actual service works. Service design means we understand the working patterns and processes, the ways of working that a particular team, individual, group has, or a service user has. So we've been working at DFE to understand things like, one of the challenges they have is bringing teachers back into the workforce that have perhaps left the workforce. And so really understanding what their challenges are, what are the blockers to them coming back into work, and working with them at that level, and then being able to put forward technology solutions to help them increase the number of teachers that come back into the workforce, for example. So that is what we would typically call end-to-end. So Lee asks, do you have a plan to have cybersecurity as part of our product range? We have always had an ambition to have a cyber offer. The challenge is that we either find loss-making cybersecurity companies, or we find really expensive cybersecurity companies that are also often still loss-making. So we've yet to find the right kind of cybersecurity offer, but it continues to be something that we will look at. Yes. So yeah, indeed. Thierry asks, family story. What did you do? You designed a new app. How are you remunerated? Is it just a project? So, the app is the front end, right? The app is what you see on the surface. Underneath that is fundamentally changing how people work, how a social worker goes about their daily life, how a social worker works with the family, and understanding it's not just design a simple mobile app. It's about what are the challenges that people face? Why is there a lack of trust between a social worker and a family? How do we change that dynamic so that trust is built, so that the family truly understands that the social worker is there to help? What do we have to do? These are all questions that we came into the engagement with. It isn't just a simple thing of doing a simple piece of coding around an app. It's about changing that. It's also, what are the systems that you're having to enter multiple pieces of data into? What are the collaboration with other agencies? Can we automate and help that? What are the APIs that have to be written? It's a deep piece of work that has a massive impact. And on the front of it, it looks like an app. But at the back of it, it means that social workers have 30% more time to spend with families, and there is a better outcome for children. So are we remunerated? It's a project. We talked about that at the very beginning. We are a consultancy project-oriented company. There may well be opportunities for us to productize that in the future, but that's a different conversation. But yeah, that was just the product.
To the last question, Neil, there about how many opportunities exist for build once, sell many time solutions. Do you want to take that one as well?
Sure. They continue to exist, and we are looking at the model for how we do that. We are profitable, cash generative, 91% cash conversion ratio in the last year. We're pretty focused on cash conversion, and it was very easy to go down a rabbit hole of productizing this and productizing that, and many a services company have come a cropper from doing that. So we are currently looking at a model for how we continue to be able to productize things in the future without necessarily impinging on our cash conversion, our profitability. Products are always way more expensive to create than you first imagine. And I've been in services long enough to know that. I've tried many times to have a service. It's a different culture. It's a different thing. So we, sort of work in progress on how we do that at the moment.
Guys, I'm just kind of conscious of time, and obviously to get the feedback from the investors as well. I know you've answered a number of the questions that we've had in, but there will be the opportunity to review all of the questions submitted by investors today. Those that you answered will be published back on the Investor Meet Company platform. So just conscious of that time, unless there is another question you can answer in sort of reasonably short order. Neil, perhaps I could hand back to you just to wrap up for investors before I direct them to feedback.
Sure. I will take. Could I just take one more question before we end? Which is given it's Thierry again. Given the public sector focus, is most of your work coming out of RFPs? Yes, we are on framework. We're on G Cloud. We're on DOS, and we are on other frameworks as well. And the great benefit of that is it's a defined spend in a defined time frame. We apply a great deal. We're very skilled at responding to G-Cloud and DOS opportunities. And the great thing is that you can have £1 million, £2 million, £3 million contracts that have a defined time frame. That one will come out on the 30th of July. The submission deadline will be the 15th of August. Shortlist will be the 30th of August, and award will be the 10th of September. And that defined budget, defined time frame. If you're skilled at responding to them, which we are, and we're also reasonably connected, so we can figure out if something, and we know enough to know if something's a shoe-in for someone else or if it's a genuine opportunity. And so, our win ratio is pretty good on those. So that, I guess.
Can I? Sorry, go on.
No, go on, Ollie.
Go on now. Sorry, I was moving on to another question because there's a technical one there from Leon which great question. I just thought I'd quickly answer it around any fair value adjustments relating to the 2 acquisitions in the period. The answer is because the acquisitions were made particularly the Amio one was made so close to the year end. The answer there is no. FutureGov one earlier in the period, there may well be a slight. It's not, the number's not published yet, but there is a small fair value adjustment associated with that.
Neil, Ollie, thank you very much for updating investors today as part of your roadshow, and thank you for being very comprehensive with your answers to the question. Could I ask investors not to close the session? You will be automatically redirected for the opportunity to provide your feedback. If you've accessed the meeting from our website, the feedback page will appear in front of you. If you've accessed it via the link in the email, you'll be asked to log in to submit your feedback. So I'd just like to say on behalf of the company and Investor Meet Company, I would like to thank you for attending today's presentation. That concludes today's presentation. Thank you, Neil. Thank you, Ollie.
Thank you.
Thank you.